What's up, everybody? Today we're going to be going over some of the general basics and honestly the fundamentals to what we're learning right now and how we're going to handle 2020. Honestly, um, so basically, as I always say, we always have to have a plan before entering a trade, and I'm going to try to go over how I plan my trades and how you can use the chart to help your trade, basically. Um, we should always have our our entry, stop loss, and targets um, laid out before the trade. You have to know what kind of position you're taking in terms of size. You have to know how long you're going to hold it for. So there's a lot of variables you got to look at for each and every chart. So basically, I'm going to go over a few ways to approach taking a position. I'm going to split it up in two. It's going to be day trading, which is sometimes either intraday trading where you're out before the end of the day, or trading within a week. I could say you're buying and you're holding, or even buying and selling for 4 days or 3 days. I still consider that day trading. So we're going to go over that, what to look for day trading, um, and mainly cover swing trading. Um, my, as I've said in our group in the past, what works for me the most in terms of profitability is swing trading. Really just having the whole plan out in front of you and taking a larger time frame setup and really having patience with it, seeing what it can do basically. Um, so I'm going to go over day trading and swing trading. Uh, we'll start with day trading. So what I look for in day trading is mainly some impulsive moves or first touch pops. Um, Basically, when you see it's oversold and it's coming into a very significant level, you can expect a pop. Like I'd say, coming into this first level confluence, you got a pop. This is a quick day trade idea here too. Coming into this level right here, um, over here and popping massively. Uh, this was a first touch pop opportunity. You're basically looking for volume to surge in, like a move where volume is going to surge in and bears could get squeezed, or if you're shorting, if you want bulls to get squeezed, you want a rejection. That's also a day trade. If, for example, here there's a day trade on the buy over here, then it popped all the way to this level, which was the consolidation that it lost. Um, You see, this is the whole consolidation. This was the top of it. The exact level lost was 10,500. That was the exact high here. Um, yeah, it could have been over here, but this is a clear rejection and could have been a trade to the downside also. Um, Even any of these pops, this was a perfect one that we had called also, me and Maple. Uh, this was also a very nice first touch pop on what we gained on the daily. Oops. So you see the pop here, you see the lower low here, big pop again, and I would say it gained from here to here. So you see the bullish engulfing, that's basically a bull flag. The bull flag is going to hold what it gained from the pop if it's bullish. If it's not bullish, it would fall right through. That's how you would set your stop. So if let's say you're taking this trade, it's coming to what this low gained on this bull flag. You enter basically in this zone. It could be the top or it could be here if possible, and you would have your stop loss below here. That's a very clear day trade or even swing trade. Um, Honestly, the long-term chart on Bitcoin is very interesting to me. Um, Pretty bullish right now. There's an inverse head and shoulders right here. honestly, I think we pop to, we'll just measure the move. Let's see, if this is the head, this is the shoulder, head, shoulder, and we pop higher here. First of all, we have the cloud as resistance, which I use sometimes, and it's actually very accurate in terms of where we could find resistance based on price history. Um, so I'm pretty bullish, and I think if you would measure the move, if this is a head and shoulders, sorry, I would place that here at the neckline, which would be, um, I would think we could target up here, 8,700 for a retest. Probably get rejected, um, somewhere over here in this area up here, on the first touch, but long term, it has a very solid chart. Uh, So this could also be a swing trade idea, but anyway, getting off topic, we're looking at day trading ideas. So impulse trading, basically when a stock is oversold. Maxer is an amazing trader for both swing trading and day trading. Um, I've traded countless times. So this was one of the calls I had made in the chat. It was basically oversold, and you see whenever it's oversold for several days in a row, whenever like over here, over here, over here, it just has these massive pops, and it's like kind of inevitable when you see that many red candles in a row on a strong stock. Those are the perfect ones to look for, honestly. Then you look for the perfect level where it could bounce off to get that pop. So this was called right here as a first touch pop, and it came in to this low gain over here. I would say it gained $8 to 8.25. The exact gain, I would say $8, but so the exact tick was around $8, 8.07, and it popped right after. This is a perfect day trade. You're basically buying in around 8 to 20. Let's say you buy in at 8.25, and you're selling. You could either sell right here, $9, retesting the the previous low, which we are now under, or you could sell, I would say, up here where this lost. Um, Either way, you're making money. Uh, you could have also took a swing trade, which would now be up like 200%, I believe, almost. Nope, not that. 185%. So I'm sure you've seen this one before. I've been trading it countless times. Up here too. Called the top here, called the reversals to the bull side. Um, so this is a perfect swing trader too. Let's say you're zoomed out now, looking at the big legs, right? You have a swing up, swing down, swing up, swing down, retesting this exact level lost. If you would want to swing it, you would go for this level up here. Well, personally, I would, $12, and it actually went a bit past it, but ended up being the neckline to this breakdown too. So you see why it's an important level. It's this level lost. Um, so this is what I would target from down here on the swing. And as you can see, we've played the swing countless times. The cumulative gains on this would be even more than 200% if you ask me. Uh, if you followed every call. So this is an example of both day trading and swing trading. Um, Day trading, uh, you can also buy an accumulation pop, which let's say here, this is a good example. So this is one could have been a day trade several times. I called it in the chat right after this red day. So basically, put out my levels. I put this low and this low, and basically gapped down and popped right away. But so the day trade could have been the first touch pop off what was gained down here on the hourly. So I looked at the hourly. I saw that here the 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 lowest candle close is at $8, 802 again, and the basically it held the low gained here. So this was a perfect day trade opportunity or swing trade. Also a good swing trade because all time frames align. In in swing trading, I'll get to that a little later, but all the time frames need to align for it to be a valid trade and for you to be comfortable letting it ride. Like it has to be a healthy stock for you to swing. So here you can see this is the massive weekly level that it's been fighting with. Called it up, I called it down here too. So I know that it has amazing movability. It's at a key, very key spot right here. So this is why it's a it was a swing opportunity and a day trade opportunity. And it really depends what you want it to take. It's up to you. Some people want to day trade, some people want to swing trade. This happens to be good for both of those. Um, so here, an accumulation pop, which I was talking about on the like a first touch, sorry, on a day trade opportunity, would be right here. So basically, you see it's consolidating in a triangle. You would draw a downtrend here. It's holding this low, this recent pop gain. It's holding the moving average. The That's the 30-day moving average, and you just buy the first green day. This is an easy day trade opportunity. You can sell it at the first resistance, which is 920, which is like 3 or 4%, or you can sell at my target, which has been here uh, since we touched down here. Now it's all the way back to support. Honestly, it looks like another buying opportunity. This is going on the watch list. This is one of those tickers to watch because it has that movability. Um, so we in in 2020, I really want to focus on these swing trades and really just going over the basics all the time and just following through to the T and just updating the plan as we go. Um, So in terms of day trading, there's first touch pops. So basically when you see a stock that's oversold and it's one of those stocks that always gets bought up when it hits a level, it has good liquidity. So it's oversold, it's coming into your level. You think bulls are going to come in to defend that level, you buy there. You have your stop loss set at like below the recent low that you're risking off, and so you take your trade as a day trade. Um, in day trading, you want to be very quick to sell at targets. If you see gains, especially if they come quick, the gains, especially if it's like if you're playing a first touch pop and it jumps 10% in like 5 minutes, you just sell right away. Honestly, um, day trading, you got to be really quick. You got to be on your feet. You have to have time to be watching the trade all day. If you don't have time, if you have a day job or whatever, you don't want to be taking day trades. You want to be taking swing trades with the same mentality. It's literally the same mentality, just more. You have more time on your hands. It takes longer for it to play out, basically. Day trading is just super intense because it all happens very quickly. So now that we've spoken about day trading, we've spoken about first touch pops and accumulation pops. Um, there's there's different ways to play day trading. I mean, so many day traders out there. Everyone has their own thing. But what works for me is swing trading. Um, the higher time frame always wins. When you're day trading, you're fighting with the smaller time frame, which is very often trappy, and it's made to confuse. Made to, like these moves happen because people get faked out and people get chopped up and things happen, and I don't know how to explain it, but it's supply and demand. But on this shorter time frames, it's harder to gauge what's happening, the larger time frame is always what wins. So I'm gonna go over uh, some trades that we've played. Um, HQI was like just textbook. Like I'm gonna use this first, and then I'm gonna say that this is one of the best um, that have played out for us. Like just textbook. This is like that trade that you need in your account. There was no panicking at all in this trade. Never even a reason to panic. It was just a beast. Just one of those that really deserved our attention. Um, so basically, I saw that it was a long-term level up here. This was a super. Wait, how long is this? 2017. Uh, Over a year of an ascending triangle up here. So you see the higher lows. A beautiful ascending triangle. This is all accumulation. Um, Even though it looks like distribution as it's hitting resistance, it's actually accumulation because the pattern that formed. Um, so it had a massive run. It hit highs of $100, dumped instantly, super oversold, just the way it went back up over here. Retested this exact level that it broke out from. So if it would fail this level, that would mean that all this work done here to accumulate is no good. It's invalid. All these people are going to go red on their trade. So basically, you're betting that that's not going to happen, that these people are going to defend their territory, and that this is a healthy stock that's going to be bought up. Um, so you see this dump here, it got bought up. I did not call this. Um, it would have been a perfect first touch opportunity or swing opportunity. Let's say you're playing the first touch, you could buy right here, sell at the first line, um, or buy right here, sell right away in the same week or whatever. But let's say you're taking a swing trade, I would enter right here. You have your stop loss below this level that came in, $50 exactly. And then as it's gaining, you just keep raising your stop loss. So here's the daily chart. So right here on this pop, initially it gains this level, which is $54 exactly. And then it pops back up, gains higher. So as soon as it pops back and closes above $56, which is it was getting rejected here, as you can see on the daily, the candles closings. And you see here it basically closes above and here again, so you would raise your stop loss to 56 from it was initially at 54 since you brought it up, so now it's at 56. It gains here, has some trouble here, it gains this level which was drawn out since before. So now you would want to start using this as your stop loss. It continues to gain higher. So now that it held this level, you see there's some confluence 1, 2, and 3 candle closings at $61 now. So this would be that new level to hold. It comes back down. Sorry, it tries to gain higher. It needs some consolidation first, comes back down to your level. You don't get stopped out because the daily candle doesn't close below. It goes higher. Then it gains this, $64. It gains higher. Then here's where you would want to start taking profit. It starts looking extended. Um, but you see what I mean? Like, even actually, if you don't want to sell, if you want to keep playing the game, which is what a swing trade would be like. And also swing trading, you want to be scaling out too. You want to scale in and scale out because you don't want to be a victim of the smaller time frame when you're entering and exiting your position. You don't want to just sell right away because it's hitting your levels. You could scale out, which means like, 'cause it's okay to be unsure. Sometimes you want to take some profits because you're not sure if it's gonna get rejected or not. So here, let's say you were still swinging, it gains these candles closings, which caused the new lows. $73 popped above, closed here, then popped above that, still gaining. Uh, then it breaks above 73.60. So this would be a new stop loss. Pops up here, retest, pop again. This starts to look like distribution. You see the high, higher high, bearish divergence, another higher high retesting what this high lost, dump again. This is your top, head and shoulders top. Um, so that's how you would play the swing to the long side, and even if you want to play the short side, you can play this rejection right here and play this as a day trade. Um, but this is the move that I actually called recently. Basically, we have all this information from the past about this pop, and now it's coming into the same pattern, same level again, and holding above it by like basically to the dollar. Um, so you have your basically we had a falling wedge, and my entry call was on this day right here. We broke above the wedge. I had called it the night of, so I put out my levels. This one was 53. The next day it tapped it and then gained the next day after. So even before I took the trade, I had seen all this from before. I had then wanted to look for targets. So basically, the way I look for targets, as I've said before, is I look for the levels lost and the levels with the most confluence. So first, off, I'm gonna just I circled all the the consolidations or highs that were lost. So here's the first one. This level caused a low. This level caused a new low. So this appears a level. This level caused a low. So this is a level. Here there's literally nothing you have to look for on this leg in terms of like long-term levels to target. Up here you see this level lost and this level. This is the high lost and this was the retest. So these all of this is resistance and would be a good target for the swing. So this is how it played out. It's up 46%. So basically it popped here, held, popped, held this, which basically when I say it held, you keep raising your stop loss on the swing trade on the bulk of your position. You could sell, you could day trade some even, you could sell in shots, but basically the bulk of the bulk of my positions, the way I played, you can play it the way, whatever way you want. I really don't care. If I make you money by uh, by putting my chart out there, then I'm happy. But basically, the way I play it is I um, I keep raising my stop loss. So here we gain here, my stop loss is now here. Here we pop again, we gain this now. All this consolidation, you see all these closings, like a massive battle right here. This is where you would raise your stop loss. You don't, as long as the day could touch in your range, it doesn't matter. As long as the candle doesn't close and you got to give time for the bulls to buy it up. Basically, you're not gonna stop out in the middle of the day when there's so much time left for them to defend. Chances are they will, because this is the higher low gain. People are still trying to get in this move because they see the breakout. So this is in breakout mode, so you really just gotta watch for higher lows and just keep riding. So here you see the low here pops higher. You would then raise it to like this right here, 57 bucks. So by the way, you're still lucky in 10% automatically from here. So then it pops higher, gains this, has a nice consolidation, some inside days, which is it's bullish when it's in an uptrend because it's consolidating, it's absorbing the seller slowly. Then it pops again. So non-stop holding this level here, 60 bucks now. It basically owns 60 bucks. The bulls don't want to lose it or else they're gonna lose momentum. So then it keeps popping. it gapped up on earnings, which is gap ups are for selling. You could have day traded this, rebought even here as it retested the 30-day moving average, and like basically your stop loss is just non-stop raising here, and you could have taken home a 45% move. Maybe even we get $80. It's definitely a possibility. We just retested the 30-day moving average and this exact level up here. It's honestly, this is interesting again, but we don't buy swing trades at highs, I'll tell you that much. Um, Maybe for a day trade or a quick or a short-term swing trade to like here max maybe a 12% trade in there, but um, so you don't want to be taking a long-term swing trade over here. This is a weekly level, as you can see, massive uptrend. So this is high time frame stuff, and you don't want to be holding into these highs, in my opinion, right now. Maybe if it breaks up, let's say it would break up, it would retest these highs up here, then maybe and then it would come down to retest. Maybe you could find a long entry for new highs, but right now it's a no swing zone. So this was a good example to go over. Labs, I'll go over some quickly, and I'm going to start to go quicker. Um, Basically called the falling wedge. We broke out here, retested, popped, retested, pop. I've been in this since 336. Constantly raising my stop loss now. 350, I raised it, then regained that, kept raising it. Now my stop loss is at 395. If we close below 395, I'm gonna stop out. You can even use 385, but right now we have this $4 gained, it looks like. So we can expect a pop higher if we don't get rejected here. So I'm constantly raising my stop loss here. I'm up like 20% maybe a little less, 17% I think. Um, no matter what, I'm lucky in about 15, 16. So I'm happy regardless of what happens, but I think we could definitely test the highs of this wedge, $5. So this is a swing trade that I took. Uh, you could also be selling the first touch resistances and like flipping as a day trader, but that's day trading versus swing trading. It really what it's what's up. It's what you want to do. Take out this cloud, it's a little messy, but so yeah, this is labs. Maxer again will could have swung any one of these lows and keep raising your stop loss. This is like a midterm swing when you see a consolidation, you're going bullish again on the move. You take your entry and you keep raising your stop loss as you gain. And when I'm talking stop loss, it has to be the max, the minimum time frame for stop loss setting is, sorry, the hourly. The hourly and the daily is what I use. Hopefully the daily, sometimes the hourly, but the daily is more obvious. Um, so you just like here it pops, doesn't lose anything. It's still above these lows. You're holding, you keep raising your stop loss, it gains, your stop loss is here now. It goes here, it gains this, your stop loss is here now, and then it pops, it gaps up, gains this, stop loss is here now, and now it gains this right here, so now your stop loss is here, you know? Um, it's that easy when you're swing trading. Day trading, like I'll just show you an example right now. It's not as clear, although like yes, it's doable for sure. I mean, some people do it. It's quicker money for sure. I just find it riskier because you don't understand it as well as the higher time frame. Um, so you gotta expect more chop in like here. I don't know. You could definitely play the shorter time frames, but it's harder to know when to sell and when not to. In my opinion, I just prefer the longer term. I'm biased, by the way. You guys could trade whatever you feel works for you. Um, so here's Maxer. It worked for us. Now I'm gonna go over um, light speed. Called this pop over here. We gained this because we kept closing above. We gained this now, retested, closed above it, just high 35s, 36 line. Now we gained 36, your stop loss is here. I would like to see a close above here, 37.50 to raise my stop there. And then hopefully you can take profits here on the first touch. Start to take profits on these resistance levels for sure. But we're in over here. Um, you could keep raising your stop loss too if you want to ride this. Uh, could have been a day trade and for these pops, but you can also swing trade too. I'm still swinging this. I'm in at 37.50. Sorry, 32.50. My stop loss is at 36 right now. If it gains this, I'm gonna raise mine and keep raising it hopefully. Otherwise, I'll stop out for my profits. And that's how I roll. Um, Now I'm gonna go over some opportunities I'm looking at. So you all know what happened to TBP after the long-term consolidation pennant here broke out. It's basically, as we know, all accumulation clearly. So this is also in the same biotech pot stock category. Um, a very long-term pennant, and the chart goes further back than this. It's just that this is when they got listed to the TSX. So I'm interested in this one and just took a small position this week. Still looking to add, simply with a stop loss below 21.5. If or I could even use a stop loss on a daily close below 22.5. The stock never closed below 22.5. Yeah, on the daily. So that's my stop loss. I already know it. We're in a long-term pennant here. Um, Bullish divergence on all these lows. Um, the I think the accumulation is pretty obvious. Uh, it's been popping at, first of all, I've been calling the day trade opportunities several times. Um, like literally every time it touched this 23, it got a big reaction. Um, so like 1, 2, 3, 4, and here I'm taking a swing trade versus instead of a day trade because I think it's gonna have an accumulation pop because of all this right here. Basically, time is up in this wedge. It's time to make a decision up or down. So here's where I'm gonna risk my trade, and I kind of have a timeline on it too. If it just lags and like starts to like fade downwards, I might exit for what is it, 10 to 15% loss. But like I said, this is a risky penny stock, and you don't want to go in too big on these because you're expecting a big move. So um, you have your stop loss set. Where I would look for, where I would look to take profits is on these rejections up here. So 30, 31, maybe even a little lower, 30 cents, let's say. This level up here, which was here, retested this little like, kind of gap that it left open and got rejected again. So this was a big leg down that led to the new low. This level up here, and then this level up here. Um, that would I would probably max it out at that. I wouldn't go for anything higher than up here. So the possibility is 230%. This is like the best case scenario that could happen. First target is 35%. Let's say you would sell a quarter. This target is 60%, 140, and then hopefully with 200%. But let's not hold our breath. We got to play it one day at a time and hopefully continue raising our stop loss. I believe because of some nice volume recently, um, it might have a long-term pop, a long-term surge up, actually, not just a pop, like TBP or something where shorts get squeezed because of what's been happening on the larger time frame. I think it could happen fast. So this is IN. Um, Canopy, which is very important to us. I called this out last week. So here's, first of all, just take a look at my long-term chart. Um, Weekly levels, this is the weekly first target. This whole leg down is caused by right here, so that's my first target. Second here, this when it fell off a cliff over here, this is the level that it fell off from, so this is why it's important. This is the high that it lost, so the main the last and best case scenario target that we would take this to. And when I say that, I mean, yes, it could go higher, but we're not going to take it past this if it were to come to that. Like that's like obviously extreme. You don't want to risk losing 250% of gains. So you got to know when to stop out of a trade too. That's why scaling out even at the first target is smart. Um, say let's say you scale out at the first target, you just have so much more of a cushion on your profitability on the trade. So you're basically comfortable by taking profits and securing some gains. So last week I called it before this red day. It was on the night after this candle. I said we're coming into these dojis right here, which is what's interesting to me. So basically, when you're looking to enter a swing position, you need the daily, the monthly, and the weekly to align. You need all the time frames to align. So this is what I'm starting to look for in Canopy. Oh, I'm starting to see in Canopy too. Um, so you see here the first touch pop is off this high up here, 1820. This consolidation up here, 1820, and like you see exactly where it popped. Like it's not the coincidence. Yes, it could obviously go for new lows. Anything is possible in this market. You can't. That's why we have stop losses. If things don't go the way you were thinking them to go, then you should stop out. But this is the risk we take in every trade. But basically, we're looking at the long trade. You want to, if you're taking a swing upward right now, you want to make sure the bottom is in. So that's what we're looking for right now. So this is the weekly. So we retested a very nice level that we could say could be the bottom. Popped back up on high volume here, similar to the volume that the weekly volume that it had on the big surges. So this is very key to me. And even on the weekly, you can see we're in decreasing volume, so we're consolidating. Um, and we also have a bull flag on the weekly here. In my opinion, can be seen the way it can be seen differently. But so basically, what I called was the first touch entry off this level right here. So from $24 to $24.90 is where I was taking my position, and I did take a position. I think at 24.70 exactly. I was a little early, but my stop loss was right here. I had put it out with a long entry like this, and I'd said that my target is up here for the mid. This is a midterm swing, so what I see is inverted head and shoulders potentially. I see this as the leg down that brought us to new lows, and I see this as a huge resistance point that is critical for this trade to work. Um, I respect it completely. This is the higher time frame daily daily rejection level, like numerous times. It's now here like that support once, twice, three times. Actually, no, this is a rejection. So these are the rejections. 1, 2, 3, 4, 5, 6 now times it touched that level. So this has to be respected completely, and this is why when I call an entry, you need to feel free to take profits like when they're in front of you. So you see it's hitting your first target here. Um, you know, if you could easily scale out, I sold on the gap up because I knew we were coming into my box right here. And I did rebuy too early. I rebought on I rebought on the closest line basically when I should have given it more time, to be honest. But I still want to be in this swing, and I think then we can get up here. Um, but so yeah, that's where we're at. I'm still in this swing. I caught a $1 cushion, so now my stop loss is below what this level gained, which would be it basically gained this right here, 24.50, which is my entry. So now my stop loss is at entry. Um, Plus I have a $1 cushion, so I'm still in the profit no matter what. But I do think it's gonna hold this low right here. This is also why we were buying too, because of this accumulation and then gap up pop. You might you might want to retest that level. So I think this is where I bought. No, it couldn't have been. It was probably the second touch. 24.70. Um, anyways, so that's where we're at on Canopy. If you're taking a midterm swing, this is what I'm looking for. I look for the recent legs lost. So I showed you where I circled. This is the most recent one. They caused the new lows, as well as this one. So this was also uh, a place to take profit. So you see the rejection there. This is a high. It popped here a high. They caused a new low, right? So these are the places you want to be taking profits, and this is a midterm target right here. Retesting this low that has now been rejected. Also, we want to see if we can break that, and I'm sure the bears are gonna defend their highs up here too. It's gonna get a first touch rejection, and then we'll see where it goes from there. But that's my midterm target. The weekly target are these for me. So 1, 2, and 3. It really depends the way you want to take the swing. Um, it really depends if you want to take a swing. You could be day trading this the whole time too. I mean, the the videos we make and the watch list, the posts we have, like they, you'll get those first touch pops every day in our chat. But we gotta it's gotta be clear for you. You gotta know why you're taking the trade, and you gotta know why you like this trade. Uh, Personally, um, so a couple of the trades I'm gonna go over very quickly, and then I'm gonna end this video. I entered FCU at $26. It's a falling wedge here. Levels you want to look for are right away this level up here, then this level over here, which is like $30 ish, then this level up here, and then ultimately this is my main target, $47. So how I'm gonna play it is now I'm in over here, gain this, my stop loss is here. I'm completely fine with it unless it stops below the 28. I would stop out for either at par or at a profit. And if it gains this, I'll raise it to here. If it gains this, I'll raise it to here, um, and continue and probably scale out at these highs over here. So that's FCU. Black, another one me and Maple we both called. Um, we call Maple called the exact bottom, but I called it. We were both like screaming the accumulation going on over here. Finally got a breakout, falling wedge breakout. I plotted these fibs because they line up perfectly with all these levels, and said that this was the first target. We're very close to that now. I would say it's pretty much hit. Could hit it tomorrow. But a very nice breakout is already up 30% up the lows, I believe. Um, so that's lack. Let's see what else. Can could have been taken as a day trade several times on the first touch opportunity. Here an accumulation pop, first touch pop, accumulation pop, accumulation pop again. This is also a swing trade you could have taken, in my opinion. I think the bottom is in. Um, this 2250 that held, it was a new all-time low, it popped back up, it held. This was your swing entry. Also consolidating above resistance of the wedge, which is how it broke out up here too. So this is very bullish on the swing. You enter here. I'm in this too. I did take a lot of profits at 30 cents. If we gain, I may rebuy, but I'm hoping for some consolidation, some healthy consolidation up here first. So that's what I'm looking for. This is an extreme risk one because it's just getting demolished by shorts. But I'm definitely betting that this is gonna hold this 9 cents. It hit nine and a half, but I think that this is the low. As you can see here, it popped. Um, 400%, not bad, 300%, and this one is like 500, if not more, sorry, way more, 700% off this level down here. So I'm just gonna go ahead and put a massive box on all this. We will bounce, in my opinion. Where I'm gonna target, I'm already in this, by the way, at 10 cents. It's still there if you want it. This is my first target, 16 cents, 15 to 16 cents. So it's been consolidating over this, then this just fell off, so that's the first target. Actually, first target would be what this lost. So we're gonna zoom in. So it popped here, tried to pop, got rejected. So you look what it lost. It's about 12, 12.5. So first target, second target, third target right here, fourth target, and fifth target max. 46% is the best case scenario, which is 380%. So basically, we're going for a massive move here. We're looking for 380%, but we don't want to get shaken out on these lows either. It could, like, you could be buying at 10 cents, then it goes to 8 cents and you're panicking and you want to exit the trade, when in reality you should stay calm because you're still in this trade. So you got to approach your size accordingly. So you basically got to know your risk. Like basically I bought at 10 cents, or my average is like 10 and a quarter. I have my entry there, and my stop loss is below 8 cents. So I'm basically planning ahead if the worst case were to happen, which is in my opinion 8 cents. I don't want to get shaken out. I want to keep stay in the position for possible, you know, these targets. So that's how I'm approaching Agra. I think I'm gonna stop it there. Um, I hope I taught you something valuable here. I think it's very, very important for you to hammer this down. Um, you need to know what your plan is before you enter the trade. Um, like you got to know what to expect and how you're playing it and how you're gonna deploy your capital towards it. One thing is reading the chart. The other thing is trading the chart. Um, I mean, it's not as easy as it sounds. You got to really play very protectively of your capital. Uh, you got to find the best case setups. Don't look for anything iffy. If something's just confusing to you, if you think like if you're bull bias, whatever, just make sure the chart is reinforced on what you're trying to say, and can't stress this enough. Plan your trades. Know what to expect, and I hope uh, I hope I taught you something today. Let me know if you have any questions again. We're gonna try to focus on these mid to longer term setups and swings, just because they're so much clearer and easier to follow up on. Easy for everyone to follow. Uh, I think that's the best way to go. So enjoy the rest of your evenings. Catch you in the chat, and let me know if you have any questions. Peace.